Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Scott Nations, President of Nations Indexes, to discuss trends in VOLQ and if we can trust bounces in the market. Scott, it's great to see you as always. And I guess the question today is, with the indexes making a recovery from last week, is this something we can trust? Has anything fundamentally under the surface changed?
Jill, if you look at the market today, it looks like it's all smooth sailing. I mean, wonderful numbers today. The Nasdaq 100 up 2.7%, the S&P up a bunch. And so it would be easy to forget all the bad news that we had last week. But markets really don't recover like this. They don't turn on a dime like this. And we really have not seen capitulation. So while this is wonderful, I don't think it's going to mark the bottom of the move. We're going to have to see some sort of messier capitulation. And to your question, nothing has really changed fundamentally. We know the Federal Reserve is going to continue to raise interest rates. It looks like they're going to have to continue to raise them pretty aggressively because we know that inflation is still out of hand, well above their 2% target. And so your question, has anything fundamentally changed? Can we trust this bounce? I really don't think we can yet. And there are still things that investors should be doing. I don't care if you trust the bounce or not. There are things to be doing. Every investor should be harvesting tax losses, and they should be thinking about their positioning, whether they're bullish or bearish here.
And Scott, when you take a look at the Nasdaq Volatility Index, or what we call VOLQ, is there anything there that you can tell from the vol complex that suggests a little bit more choppiness ahead?
Well, it's very high, but you would expect that right now. It should be high because realized volatility is high, and so it makes sense to own options right now. Jill, the big news is that options on the VOLQ index launched last week. And so hedgers and speculators who want to hedge their portfolio, their Nasdaq 100 portfolio, or who want to speculate on the direction of volatility, now have a brand new tool. Those VOLQ options, ticker symbol VOLQ, just launched last week, but there are a bunch of strike prices in the July expiration. Markets are tightening up. So regardless of your outlook for the rest of the month and into July, you have a new tool.
And Scott, whether it's VOLQ or another hedging instrument, has insurance gotten too expensive at this point as we're still waiting for this capitulation in the market?
Again, it's very expensive, but it's a little bit like, if you try to insure your house when your next door neighbor's house is on fire, you're going to expect insurance to cost more than it might otherwise. We see that going on right now. Yes, volatility is high. All the volatility indexes are high, but that's because we're seeing a tremendous amount of realized volatility. Some people are wondering why they're not higher. Well, they're actually just about right where they're at right now for the historical volatility that we've seen over the past, say, 4 to 6 weeks. So they're saying that it's not all clear sailing yet, and we wouldn't expect it to be given all the volatility we've seen.
And right, and you had noted that the average drawdown in the Nasdaq 100 is just over 35% from 52-week highs. And in fact, several names are down double that amount. When do you start to get more comfortable and start reevaluating where stocks are trading right now to pick up some stocks that are significantly discounted and still have good underlying fundamentals?
Yeah, Joe, I think we've talked about this recently. There are some names in the Nasdaq 100 that have really, really been punished, that are down more than 60 or 70%. Some of those names make a lot of sense. I think DocuSign is an example of a work from home company that's going to continue to do really well, as opposed to, say, emailing, signing, faxing, emailing back. That business makes tremendous sense to me. But as you pointed out, the average drawdown from the 52-week high in the Nasdaq 100 is just over 35%. So there's still plenty of bargains out there. When will things turn around? I think when the Nasdaq 100 gets bad news, either in the form of bad earnings or a more hawkish Fed than we expect, and is able to hold its ground, that's when I'll be confident that it's really time to be picking up some of these bargains.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.